everyone. So Friday again we saw US market continuing its rally. Since last 3-4 days, the US market has turned out very strong post the meeting of Fed, wherein uncertainty of Fed how it will be more aggressive was removed, and that has led to improvement in US equity market, and was also supported by some good corporate results over there. If we talk about the Asian market today, they are mixed bag. Apart from Hong Kong and China, other markets are marginally positive, whereas China and Hong Kongs are negative. And futures of the US market are also seeing some profit booking after a long run. So the commodity are also driven by positive trend from dollar index, which came off in last few days. And today, though oil is down to $103, but if we talk about iron ore, that is up by around 2%, and the steel is up by around 1%. The oil is there is a OPEC plus Russia meeting on Wednesday, which is people are expecting that there could be some improvement. There could be some increase in production, which may be expected on Wednesday, as Joe Biden has done. Has visited United Arab in recent past. So the expectation is comparatively positive for increase in some productions. So that is keeping the oil on check, and is marginally down to $103. So overall in India also we had seen a good run up in last week. So quite possible the market has moved up very fast in recent time. So may see some sideway or profit booking at current level. Now I'll request technical team to take up from here.
Yes, thank you. So good morning, all of you. This is Bharti. Today, the market is likely to open on a flattish note, and we might get to see some sideways momentum during the day. From the last few trading sessions, we are witnessing that once the Nifty has managed to give a breakout of 16,600 level, it has just tested the fate of 17,150 levels on the closing basis, which gives a very positive sign on the technical front. Going ahead, 17,150, 17,200 will act as a crucial resistance levels. If it surpasses that level, then only we can witness continuity of this pullback rally towards 17,200 to 17,400 levels on the high side. Whereas on the downside, it has a very support at around 17,000 psychological mark. If it's break that level on the closing basis, then we're likely to witness some profit booking, which might take a Nifty towards 16,800 to 16,700 levels on the downside. The view will remain a positive as long as Nifty sustains above 17,000 levels. Coming towards the Bank Nifty shows a very strong momentum, has shown a very strong momentum rally from the last 3 trading sessions. And as of now, it is just well maintained about 37,500 levels on the closing basis. We believe that Friday it has just shown some sort of a signal of a profit booking compared to the Bank Nifty. So I believe if the Bank Nifty breaks the 37,300 levels on the downside, then the selling pressure or say the profit booking is likely to be continued, which might take a Bank Nifty towards 37,000 levels. So any move above that level, 37,300, we are likely to witness some profit bookings. So just if you're having any long positions, hold on with a trailing stop loss of 37,300. Whereas on the higher side, 37,820 and 38,000 will act as a crucial support level on the Bank Nifty front. Coming towards the Nifty Finance, 17,270, 17,350 are the resistance level for a day. Whereas on the downside, 70,100 and 17,000 are the crucial support levels for the Nifty Finance. I think that's it from my end. I request derivative guys to take a call forward.
Yeah, thank you, Swati. See, on the derivative front, Very importantly, the rollovers were, a little below average. Open interest has come down. So definitely, some profit booking has gone in, or the longs have been liquidated. However, on Friday, what has happened is a little bit of open interest has been built in. And some longs have been created, fresh longs have been created after the expiry on Friday. With the PCR near the 1.4 levels, there's not much space for the PCR to go up. However, the VIX continues to remain, downward near the 16 levels. So all in all, all these indicators are little mixed. So, looking at all the indicators, looks like, some more buying can come in with 17,000 now being the highest open interest amongst puts, which has changed from 16,500, which was earlier. So the base has shifted upwards. So any movement down towards 17,000 will be met with buying force. So a good demand area has been created around the 17,000 levels. 17,300 is a minor resistance, but highest open interest now has shifted from 17,000 call to 17,500 call. So the again resistance has shifted upwards. So there is space up till 17,500 for Nifty to move up. From there, some amount of resistance or selling pressure can come in. And all in all, for the next couple of days, we expect some, trade in between 17,150 on the downside to about 17,300, 17,400 levels. So largely range bound trading session for the next couple of days. From the stock specific front, most of the stocks continue to do well. A lot of long built up has been seen in Bank of Baroda. It can likely witness some buying action. Banking stocks have seen good amount of buying going in. HDFC Bank has broken out also. So, look out for the same. There is a high amount of open interest built up in certain banking names. So, banking will be up and down. Only select banks now will probably move up. So the likes of Bank of Baroda, HDFC Bank are likely to move up. So look out for the same. Only IT sector, the whole sector has witnessed a lot of long built up, and very likely this sector will continue its buying momentum. So Wipro, L&T Technologies, Infosys, these are the stocks which can do very well going forward as well, because a lot of shorts are built in. So short covering action is likely to continue for today. That's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. So continuing with what Nirav was just mentioning on the results front, Bank of Baroda result was above expectation because of lower credit cost, which came at just 0.8% against expectation of almost double at 1.5%. Slippage also reduced to 2.1% versus 2.8% in March quarter, and Q1 being a seasonally weak quarter, this is good performance. Net NPA continues to come down. It is now at 1.6% versus 1.7 in March. And also loan book at 8.4 lakh crores is quite sizable and grew by 18% year on year and 2.6% quarter on quarter. So on all parameters this quarter, Bank of Baroda has done well. So expect outperformance in the short to medium term. HDFC Limited result was in line with expectation. GNPA increased slightly from 1.9 to 2.1%. Loan growth continues to accelerate gradually. It inched up to 17% year on year, and growth in individual loan book was at 19%, which is the highest growth witnessed in individual loans in the last 8 years. So it is positive for HDFC Limited. Cholamandalam, the NBFC company, result was below expectation because of higher credit cost at 1.5% against expectation of 0.9%. Asset quality was stable. Loan growth improved to 21% year on year, and disbursals in the new business, which is the digital SME part, continued to accelerate and formed 16% of total disbursements. So from short-term perspective, we are neutral, but long-term remain positive. Credit Access Grameen result was marginally below expectation mainly because of temporary problems faced due to the RBI norms for a microfinance which changed. So that impacted it during the month of April and May, and company could not disburse loans. That is why the net interest income growth was lesser than expectation. But from June onwards, the company is performing normally, and so from Q2 onwards, performance should be good. Net NPA for this company remains at just 0.1%. So everything has been provided. We are positive on credit access ground. Star Health and Allied Insurance, a newly listed company, result has improved. Gross written premium increased 13% year on year. And combined ratio is stable quarter on quarter at 98%. And more importantly, the retail health market share for the company continues to increase. It is at 32% against 29% last year. And ROE has also bounced back to 21%. We are positive on Star Health. Care rating result has improved due to margin improvement on the back of reduced employee expenses. Ratings revenue also increased 16% year on year. If we compare it with CRISIL's rating segment, the performance is in line with that of CRISIL. CRISIL also grew by 16% year on year. And post exit of the previous MD Ajay Mahajan, we are awaiting to see if someone of good reputation again heads the company, as the banking system credit growth is picking up. And so ratings industry will also have good growth going forward, and company can do well. So we are positive for Care Ratings. DCB Bank result was in line with expectation. Operating performance was impacted because of lower treasury income and increasing OPEX, leading to decline in profit before provisioning. Slippage also remained high at 7.7% versus 5.2% in March quarter. On the positive side, the provisions have come in lower at just 0.5% against expectation of 1%, and loan growth also accelerated to 18%. We think looking at the highly secured nature of the book, the provisions will remain at lower levels despite the slippages being high, and slippage is mainly from a gold side of the book, where the recovery rate is almost 100%. So we think there would be good improvement in metrics, particularly on slippage front from last quarter of current financial year. So from Q4 onwards, expect improved performance, and from long-term perspective, we remain positive. IDFC First Bank result has improved. Loan growth was strong at 21% year on year and 7% quarter on quarter. Credit cost continues to decline. It came at just 1% versus 1.3% in March quarter, and net NPA also continues to decline to 1.3 against 1.5 in March. We are positive on IDFC First Bank. MCX result was below expectation. Revenue grew 2% quarter on quarter, but because of higher operating expenditure, the EBITDA declined 8% quarter on quarter. Also, the oil and gas prices are down from March quarter levels, and are expected to continue to be soft. So that can be negative for MCX going forward. So we are neutral. CDSL result was below expectation. Revenue increased 3% quarter on quarter. EBITDA declined 17% quarter on quarter, and profit came at 58 crore versus March quarter 78 crore and expectation of 72 crore. So performance was bad over here, and we are neutral for CDSL. Thank you.
Good morning, everyone. Nazara Technologies has posted above expectation set of numbers for the quarter, with revenue growth coming in at 27% QOQ and 70% year on year. Higher revenue has led to higher profit to the company. Stock is trading at a PE of 42 times FY24 EPS. Easy Trip Planners has posted improved set of numbers for the quarter, with revenue growing by 43% QOQ and coming in at 87 crores, which was same in Q3. Higher revenue has led to higher profit to the company. Stock is trading at a PE of 41 times FY24 EPS. Thank you.
Yeah, good morning. Godavari Power and Ispat reported improved set of numbers, mainly due to higher realization. Revenue came at 1,666 versus 1438 crores. The company had contracted sales in Q1. So despite the export tax, pellet realization was strong at 11,600 per ton. EBITDA came at 461 crores versus 397 crores sequentially. Margins were flat quarter on quarter. So post export tax, pellet prices have dropped to 8,000 per ton in June, but have recovered to 8,900 per ton. So we can see around 3,000 per ton reduction in Q2. Sarda Energy and Minerals reported improved set of numbers. Revenue came at 1261 crores versus 1,058. EBITDA came at 370 crores versus 352 crores. The stock is trading at 4.2 times TTM earnings. Thank you.
Good morning. Ashok Leyland announced its result. The result came below expectation. Revenue came in at 7,223 crore versus an expectation of 7,020 crore, which grew by 124% on a YOY basis, but it was due to a low base, but it saw degrowth of 17% on a sequential basis. The volume for the quarter stood at 39,651 versus 48,719 units sequentially and 17,390 units on a YOY basis. EBITDA margin came in at 4% versus an expectation of 6.7% as against 8.9% sequentially and a negative growth of 4.7% on a YOY basis. The company took price hikes in January, March, April, and recently to ensure margin enhancement with growth. The truck market share grew to 31% as against 26% on a YOY basis. The EV arms switch has a capex of around $150 to $200 million for the next 2 years, covering India, UK, and Spain. The stock is trading at a PE of 18.7 times FY24 EPS. Sundaram Fasteners announced its results. The result was ahead of expectation. Revenue came in at 1,260 crore versus an expectation of 1,233 crores, which grew by 8% sequentially and 32% on a YOY basis. EBITDA margin came in at 17% versus an expectation of 15.5%. The company has registered a strong operating performance and reported the highest ever profit despite a challenging environment posed by continuous increase in raw material prices, inflationary impact in indirect materials, and steep increase in freight costs and other inputs. On the capex front, SFL had planned an investment of 350 crore over a period of 5 years for manufacturing advanced automotive technology components such as powertrain sub-assemblies for electric vehicles and select internal combustion engine vehicles. The stock is trading at a PE of 20 times FY24 EPS. Thank you.
Yeah, a few more results. Sun Pharma reported results, and the results were above expectations, mainly driven by their specialty portfolio in the US market, which is continue to do well. EBITDA quarter on quarter improved by almost 5% and increased by 32% year on year. Whereas other pharma companies are facing a lot of problems in the US market, but Sun Pharma is outperforming mainly on account of their specialty portfolio, which is continue to do well in this quarter as well. Even the outlook for this specialty portfolio continue to remain positive in the coming period. As such, outlook from here also for Sun Pharma continue to remain positive. Even Cipla has reported better than above expected numbers, wherein though revenue remained more of a flattish in line with expectations, and year on year it came off a bit as against expectation. It was down by around 2%, but the EBITDA margin has shown good improvement, and it came at around 21% versus expectation of around 20%. So that has led to improvement in performance of the company. JK Paper has reported good number. In fact, all the paper companies had already reported Earlier also good numbers, and JK Paper has also shown similar trend. And the prices of the most of the paper company has already moved up ahead of the results. So post result, we may not see any great move from here, or maybe seeing some profit booking also. Then Finotech Chemical also reported good number. The result has improved by the revenue has improved by almost around 12% quarter on quarter and 100% year on year. And EBITDA margin has also shown improving trend in this quarter at 19.3% versus quarter on quarter 17 and year on year 15%. The outlook for the company in the long run is positive, but before result, the stock has moved up by almost 20%. So do not expect further moving up from the current level, as the valuations are comparatively steep for the company. Then DLF has reported numbers, and the numbers are okay. And the new booking was more of in line with other player, wherein quarter on quarter the new booking has declined and came in at around 2040 crores against last quarter 2700 crores. Whereas last year the booking in the first quarter was only 1000 crores. So year on year the booking has doubled, but quarter on quarter the booking has come off. As such, new fresh bookings are in line with what the other companies has reported, except Soba Developer, which has shown similar booking as compared to the fourth quarter, but other company had shown declining trend quarter on quarter. Then company has generated good cash in this quarter, and almost around they had repaid around 400 crore of debt, which is also positive for the company. And even their rental business is showing a sign of improvement, wherein the occupancy is consistently steadily increasing, and the new projects are now which are coming up live are getting absorbed by in the market. So overall results was okay, and outlook seems positive for from a bit longer term perspective. Near term, because of the increasing interest rate environment, the valuation of rental business come off in near term. So that is not so great. So near term may remain sideways, but long term outlook for the DLF is positive. Then GMR Infra came up with the number, and the result has shown declining trend in this quarter. Earlier, the company was has adopted force majeure clause for the Delhi airport, and was not accounting for the some of the charges which they need to pay to authority, and which they had settled from the April month, and now going forward they are providing accordingly. So this has had an impact on the results, and quarter on quarter the result declined. So overall result of GMR was declining in this quarter. So now this is from equity desk. Now I hand it over to commodity desk for their comment. Thank you.
Yeah, thank you, sir. Good morning, everyone. Commodity have witnessed a rally, especially in precious metal and metals in the couple of days. So breather is expected here, and maybe one should buy on dips. Gold October contract could be entered around 250 to 300 levels with a stop loss of 51,000. Silver too is supportive at 57,500 to 57,000 zone. It is a supportive zone. So buying on dips is again recommended in silver. Going forward, prices can test 59,000 on the higher end. Copper to 650 to 650 is a good level again to enter for a pullback till 660, 665. Zinc similarly 290 to 291 is a good level to enter long. So buying with a stop loss of 289 is recommended. Whereas crude have witnessed fall. So it is weak below 7800. So it can test 7650, 7600 on lower end. Natural gas, we have seen a fall from 700 levels or to 6. We expect 620 to 625. Sorry, 615. A good supportive zone. So buying on 620 level is recommended with a stop loss of 612. Again, a pullback till 635, 640 is expected. Yeah. Thank you very much. Ria can take over from there.
Good morning, everyone. So on the currency front, the dollar index has dipped below the levels of 106 levels and could dip towards 104.70 to 104.50 levels, with broader perspective remaining on the bullish side, as given there is still the elevated risk with respect to the geopolitical and commodity side. Market may still be hesitant to completely give in to the risk on sentiment and move away from the safe havens right now. Also, if you look at the Fed's, the two main data points that it has considered for the rate decisions, the inflation and the employment numbers. So inflation has continued to run high, whereas employment numbers have remains at good levels, thus downing the probability of Fed pausing right now. And but it may head towards the slowdown on the rates. But pausing still remains questionable right now. On the Eurozone front, the inflation has climbed to another all-time high to 8.9% in July, thus calling for another big move on the interest rate by ECB. With the natural gas prices rising to, on the Eurozone, as the natural gas prices are rising, we are seeing a decline in the reserves as well, and thus energy crisis will continue to grapple the economy, fueling the recession's probability. On the Indian rupee, the Indian rupee has appreciated quite sharply, and we have seen today opening around 79.30. On the cross currency front, also we could see some strength coming in, take into consideration the dip dollar index is taking. So pound USD, Euro USD, USD JPY could see a green sessions in green session today. For the levels, I think 79.28 in the August monthly expiry remains a very pivot resistance, and a breakdown of that could lead the pair towards 79.78.80. So a short could be initiated around those levels. As far as JPY INR goes, some strength could be seen. 60.10 is the level that you could see as a resistance in the intraday, and breakout of the same could lead the pair towards 60.50 levels. You can take a long position above the same, that is 60.10 for the target of 60.50. Keep a very strict SL at 59.88. As far as Euro INR and Pound INR, I think weak to sideways consolidation momentum could be seen into the pair. 81.46, 81.53 is the resistance on the Euro INR, whereas 81.14 will act as a support. For the Pound INR, 96, 98, 97 will be the resistance, whereas 96.50, 96.37 would be the support into the GBP INR. So that's all for today. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.